Hey, Susannah here. So we're going to talk bridging loans. It's a question I get asked loads. What is a bridging loan? How do they work? How much does it cost? When should you get a bridging loan? And how would you get a bridging loan? Right, let's start at the beginning, shall we? What is a bridging loan? Well, a bridging loan is kind of what it sounds like. It's a bridge. It takes you from position A. There's a house I want to buy. I don't have enough money. It's unmortgageable. I need to buy it really quickly. Often the 3 reasons to get a bridging loan. Whoop! I've bought it, I've renovated it, and now I'm going to flip it or I'm going to refinance it. So the bridging loan is the bit in the middle to move you from position A, I'd like to buy the house, but I can't get a mortgage on it because it's unmortgageable, or I need to buy it really quickly, or I just don't have enough money, to position B, I'm going to sell it out and pay back the bridging loan, or I'm going to refinance it. So bridging loan is a short-term item. It can be anything from 6 months to 18 months. That you want to turn it around. By the way, I am not an IFA, I'm not regulated, I'm not insured, I'm not giving you advice as a financial person. I've done absolutely tons of bridging loans, and I'm here to give you my opinion. So when would you get a bridging loan? When you need it. When do you need a bridging loan? Well, you need a bridging loan when there's a question of mortgageability or speed, or simply you don't have the money yourself. And typically it's going to be mortgageability or speed, because although you could use a bridging loan for position C, which we'll talk about. So mortgageability, if it can't be lived in, you're not going to get a mortgage on it. So if you're buying an old wreck and that's got an amazing deal in it, and you just can't get the mortgage for it, you're going to use a bridging loan to do it up, to then put it to a position that you're either going to sell it or you're going to get a mortgage on it. Speed. Some bridging loans are built for auctions. So bridging loans can be really fast, but not all bridging loans are built for auctions. So you've got to check that you're getting the right bridging loan. Or C, affordability. I don't have the money for this, and I'm going to take a bridging loan. And what I want to do is I want to refinance it and pull all my cash out after 6 months. Now, you can often do that with a mortgage. You get the mortgage, you renovate it, you go back to the mortgage and your company and you say, actually, it's worth a lot more. But what you will occasionally find, that instead of them just giving you the new loan at the lower cost, they go, yes, we're going to give you a further advance at like a colossally high interest rate. And you're like, what? I'm going to be stuck for 5 years paying that interest rate? So sometimes you might buy a perfectly manageable house, but you've bought it discounted, renovate it to what it needs to be, and then go for the mortgage once and once only at the higher price. So when would you use a bridging loan? 1 for speed, 2 for mortgageability when it's not mortgageable, or 3 because it's more cost efficient to bridge you from a discounted property, renovated it, get rid of the bridging loan through refinancing to a higher price. Okay, your next question is going to be, how do you get a bridging loan? Well, the good news here is you don't need to be an expert in this kind of thing. You need to have a financial advisor who is good at this kind of thing. I typically find that people who are amazing at mortgages, IFAs, buy-to-let mortgages, which is the kind I deal in, are not so strong at commercial. So you're probably in your toolbox, in your team, your A-listers, you're going to need the people who are great at buy-to-let rental mortgages, but also a different financial advisor who's really good at development and commercial projects. And that is probably going to be your bridging loan financial advisor. How much does it cost? Now, this is the bit that everybody's a little bit frightened of, and I get that, okay? Totally get that. So it depends, is the answer. But let me run you through the main areas of cost for you to watch out for to make sure you've ticked them off. First is interest. No, at the moment, at time of filming, it's kind of 8 to 9% on an average bridging loan, but it can be anything from 6 up to like 16, 17%. Okay, the second cost is going to be your entry cost. So your admin fees or the entry cost, whatever they call it. Your third cost is going to be the exit cost. When you pay it off, they'll charge you a fee. I like a £200 fee. I don't really like anything more, but they can stuff those fees high. Your fourth cost is going to be you're going to pay for their lawyers. Now, you do that anyway for mortgage companies, but this is where they can really stuff the bill. So make sure you understand what the cost will be. And your fifth cost is going to be, they're going to charge you for the survey. Again, mortgage companies do that, so it's not unusual, but occasionally bridging companies, their costs are just so much higher. And then there may be an auxiliary cost, and you may also have your cost of your IFA, or they may have that wrapped in the bridge. So you've got a number of costs on top of the interest rate to look out for, okay? How are you going to be paying for this? That's the next question. There are so many bridging loans and there are so many ways of using them, but mainly you've got three ways of paying for the bridging loan. You can pay all the interest wrapped up at the beginning and it's deducted off your loan. So on the one hand, that's great because you don't incur any additional cost. You're not worrying about your cash flow because it's all paid for, like, I don't know, the first 6 months, for example. And you're like, phew, I don't need to worry about that bouncing because I'm so tight for money because I'm in the early days in property. On the other hand, that impacts on your cash flow. Of course it does. Or you can pay on a monthly basis. So that's great because it's just chugging along, but you've got to make sure the money's in to pay for it. And in the early days, money's probably going to be quite tight. Or you can, with some but not all bridging companies, pay for it wrapped up. That means that you'll pay for the cost at the end when you sell or refinance the property and come out of the bridge. Some companies will allow you to do that. So that's amazing for your cash flow, but of course it costs you more. And then finally, and this is where your ears have definitely got to prick up, you can at times get bridging loans that are not based on the current purchase price of the property, but they're based on what the end value of the property will be when you've done it up. Now, amazing, yeah? Because, you know, say they're going to give you 70% of the end value, but you've got the property discounted at 75% of the value. Woohoo! You're basically going to get it fully funded. But those kind of loans will depend on your experience, depend on the property, and depend on the provider. Normally, you'll get about 70% of the bridge. So if the property costs you 100, you're going to have to put in 30 grand. If the property costs you 200, you're going to have to put in 60 grand and they'll bridge you about 140. So that is how much it costs and the kind of things to look out for and what choices to find. Are you ready for the next tip? So when should you choose a bridging loan over private investors, joint ventures, your own cash or mortgages? Well, there's a number of scenarios where bridging loans are really, really useful and will give you the competitive edge and you'll beat everybody else to the deal. When the property needs to be bought fast. So that could either be something like an auction scenario where you've got to buy it really quickly, or just the vendor needs it to be bought really fast for whatever personal reason. It might be repossession, it might be debt. Let's not worry about their reason, but my goodness, they need it to be bought fast. Not every bridging loan is fast, so make sure your financial advisor is giving you the right one. When it is unmortgageable. So years ago when I was starting out, there was a beautiful trick to this. If a property was unmortgageable, meaning a person is judged that they couldn't live in it, all you did was you bunged in a toilet into the bathroom and a sink into the kitchen. Tick, it's officially mortgageable. They're a little bit more choosy these days. So if you've gone for a mortgage and they've said no, we're not buying this, we're not going to lend on it, or they give you 100% retention until you've renovated it, they're basically saying it's unmortgageable at the moment. Well, then you switch to bridging loans, because bridging loans take the risk for something that's unmortgageable because it needs a lot of work to do it up. Maybe you just need the cash. But you want to move this property between one scenario or another. So a real scenario there is flipping. You're not going to flip with a mortgage because first off, that's usually against lenders' rules. And secondly, there's often really big redemption clauses. So you're going to use a flip to bridge, aren't you? Or you've decided that you're going to get a refinance and you're going to pull all your cash back out, but you don't want to pay, as I explained earlier, the higher level further advanced fees that they tend to charge you, or the interest costs that they tend to charge you. So whatever your scenario is, you're like, I need the cash temporarily, and then I'm either going to flip it or I'm going to refinance it all as a big fat oneer. So those are the main routes that you would tend to use a bridging loan for. So why do I advocate bridging loans? Because they are fluid, they are flexible. There are so many of them. I was once in a meeting with the chief exec of a bank, and he was there with his colleagues. And of course, my perception was, oh, I'm so lucky to get funding. And that might be your perception too. But it's really interesting listening to his point of view. His point of view was, inside, particularly the M25, but in the whole of the UK, you stick your hand out, is what he said. These were his exact words, and you'll find a bridging loan. So there are so many organisations that offer different types of scenarios or specialised bridging loans that you will almost certainly find a bridging loan for your project. So anything that can't be funded, go find yourself a bridging loan. Or you decide, look, I don't want to do a joint venture with an investor, or I don't want to work with investors, so I'll use bridging loans instead. So those are all the reasons that you're going to work with bridging loans. But main tips for me are, add up the whole cost. Even if I'm flipping, I will take an 18-month bridge with a very low redemption clause, because if it went wrong, I don't want to be like on penalty fees. Know all of your costs, know your exit route, plan A, plan B, plan C, plan D. So plan A is flip, plan B is single let, plan C is multi-let, plan D is serviced accommodation. Just because if you're on a bridge, it is a bit more expensive, you want to mitigate that risk. And then get informed with an amazing broker about all the wonderful, amazing rainbow of bridges out there, because it gives you competitive advantage. And what's competitive advantage do? It means you're the one buying the deal. It means you're the one making the money. It means you're the one winning. So bridging is a tool for your toolkit that you need to know as you professionalize in property. You're going to be told to download or whatever, but have a look at my website, thegoodpropertycompany.co.uk, and remember to subscribe, remember to like, and you'll get all of my videos on my YouTube channel. And have a good explore, get the popcorn out, enjoy, and good luck to you. You want to make a shed load of cash relatively fast? That's a buy to sell strategy. Download my buy to sell pack, written for you guys. Everything I know popped into there for you.